on today's session. Ali is a very good friend of mine. We go back years, more than a decade and a half. He's based in London at the moment. He runs KASP Securities in Pakistan. I'm sure all of you or most of you are familiar with the KSP brand. It's the oldest capital markets business in Pakistan. It was established in 1952. And Ali has spent his career in London. Only recently he took over as the MD of KSP Securities. Prior to that, he was for entire career, he was a market specialist with various banks, covering technology stocks and other stocks as well, all based in London. After that, he was also a partner at a research firm called Autonomous Research, which was then acquired by a very large firm called AllianceBernstein, which I'm sure many of you are familiar with. He also spent some time as the CFO of a UK-listed fintech company called SafeCharge, which was acquired for $1 billion. He has been ranked as one of top 3 tech analysts in Europe in 2013 by Thomson Reuters when he was in that business. And he has covered, as I mentioned, European tech stocks at various banks, including UBS, Bernbeck. And he was at Oxford with me as a Rhodes Scholar. Currently, he's a patron of British Pakistan Foundation and also a member of Asia Council at Woodrow Wilson Center. I think one thing, Ali has just recently also been appointed as a financial market specialist for Asian Development Bank. Quite a long list of achievements, but pleasure to introduce you, Ali. Over to you. I think people are here to listen to you and not me.
Okay, so we might, Ali, you are muted, I think. Sorry, Ali, can you go ahead again? Ali? Sorry, Ali, now, please, you're good. We can start now. Good.
Ali, sorry about that. Hammad, sorry, I didn't hear you. I dropped off out, and the last I could hear, you were doing the introduction. Is Hammad there? I think now he has dropped out.
Yeah, I am here. I think I couldn't unmute myself, but we've done the introduction and told people about you already. So I just mentioned that all of the stuff that you've done in the past and that you're a very good friend of mine. So people are now waiting to hear. We'll cover just one thing. I think we'll cover mostly Pakistani stock market in this session. But given Ali's extensive background, we are going to get him in again in another session covering some other aspects of generally emerging markets and macroeconomy of Pakistan and other things as well. But today we'll be focused on the capital markets in Pakistan specifically.
Thank you, Hammad. It's a pleasure to be talking to you and also to your friends. It seems like a very interactive and large community. And as you said that we were together at Oxford, and after that I joined UBS and did tech research for 15 years at various places. UBS, where I covered Nokia, Ericsson, and Alcatel-Lucent. That was a large European tech sector at that time. Collective market cap was $700 billion. And then, of course, the disruptive shift happened, driven by the likes of Apple and Samsung, where the software moved to the US and the hardware moved to Asia, and European software and tech sector almost shrank considerably. Post that, I did investing. I joined a hedge fund of Li Ka-shing, who's the richest man in Asia, and I was investing on his behalf in EMEA markets. So starting all the way from Russia, going down to Eastern Europe, Middle East, and Africa, all the way to South Africa. And at that time, I extended it to include Pakistan as well. Then I did tech research again at Berenberg, which is the second oldest bank in Europe, covering everything from Apple in the US to Samsung in Korea, but focusing particularly on fintech. And in 2014, one of the companies which I covered, SafeCharge, which was listed on London Stock Exchange, payment processing company, so similar to Stripe or Adyen and WorldPay, hired me to become their CFO. So where I did M&A in Asia, in Singapore, in Germany. And the reason I'm giving this background is because that's the journey which led me to appreciate the value of Pakistani stock market. Because coming from Pakistan, originally from Islamabad, went to Lums, coming from, living in Islamabad and studying in Lahore, we tend to have a very negative bias of both Pakistani stock market and we have stereotypical caricatures of the people involved in it. Stock market in Pakistan is Karachi focused. Karachi is quite distant, not just geographically, but also culturally and philosophically from the up north. And the reason why up north is important is because that's where the bigger population base is. So Pakistan stock market based in Karachi, we had very strong negative perceptions of it. And so it was only when I started to invest in emerging markets, I started to appreciate how good Pakistani market was, both from a corporate governance perspective, a transparency perspective, and most importantly, from a return perspective, compared to almost all of these markets. So after SafeCharge, I became a partner at a firm called Autonomous Research, which was acquired by AllianceBernstein. AllianceBernstein is one of the top 3 asset managers in the US. SafeCharge was later on acquired for $1 billion by Novi, which is a Canadian business. And I think now they're planning an IPO in the US. And following that, I raised money from friends and family to restart KSB. So KSB, as Hammad mentioned, the history with that, it is the oldest capital markets business in Pakistan. Till 2014, it was representing Merril Lynch, which became Bank of America Merril Lynch in Pakistan. But in 2014, there was a hostile takeover of KSB Bank, and the securities business was a subsidiary of that. So that became another entity. It became Bank Islami Pakistan Securities. And we relaunched KSB 2 years ago. I relaunched KSB 2 years ago along with my partner.
Hammad, I think we've lost you there. I think Hammad might be just reconnecting. We'll just give Hammad, Hammad, I'm sorry, Ali will be rejoining.
Yeah, seems we've lost Ali. I think he's back. Maybe it's a connection problem. Ali, are you able to hear us?
Yeah. Ali?
Ali, your voice is not. We can see your video, but we can't hear any voice. Maybe just join as an audio.
Yeah.
You seem to be mute. Your mic seems to be mute. Are you able to unmute it by force?
He is unmuted, but I think it's some other issue. So probably, as per your suggestion, it is better if he dials in using his cell phone, probably. Okay, so Ali, yeah, there you go. Ali, can you hear us now? Ali? There is an Ali K that I have unmuted, and there is an Ali Farid Khwaja. Both are unmuted.
Ali Farid Khwaja is still muted. This is Ali K actually. So you need to unmute Ali Farid and keep me.
Okay.
Okay, now it's fine.
Okay,
Thank
now
you,
we're back.
Ali.
Yes.
Ali Kev, yeah, thank you for that. Thank you. Yeah, we're back online.
I think my internet fails me today, so I'm just moved to 4G on my phone. So that should be okay now. Hammad, are you there?
Yep, Ali, I'm here. I think we lost you when you were mentioning the hostile takeover of KSB. So let's move from there.
Okay, yes. So that entity became Bank Islami, and we relaunched KSB 2 years ago in 2018. I raised money from some of my former bosses and friends, which include the CTO of Goldman Sachs, the CEO of Berenberg Bank, the CEO of KBW, which is a part of a US bank called Stifel. And we relaunched it in April 2018. And since then, we have been the fastest growing stock brokerage in Pakistan with a 2% market share. And our clients include everybody from the largest asset managers in the world. So the funds such as Pictet, BlackRock, Aberdeen Standard, to an individual who can download the app called K-Trade and start investing in Pakistan with 5,000 rupees. And these guys use our platform for trading and for research and for sales. So coming from outside, the two things which I thought, the name of the brokerage is called KSB. That's a question. And the app is called ktrade.pk. It's available both on iOS and Android. And I think it should be available in the US as well. But the important thing, and then coming back to the storyline in terms of, why did I leave and start the business in Pakistan, was that after investing in all of these markets, I thought that Pakistan was a rare opportunity, that the capital markets had very high return. Pakistani stock market had generated a top 10 return globally in dollar terms over the last 20 years. But still, the market was underpenetrated. Very few people invested in the stock market. So I thought there was an opportunity of growing the market both by enabling a common person to invest in the stock market, and B, allowing the international investors, and especially the diaspora, to connect with Pakistan. So we opened up an office in DC, we have an office in London, and we have investors in Hong Kong. So we are the only capital markets business in Pakistan, which is international, and which has direct access to investors over here. And the people we got on board were also people who had worked in international markets. So my colleague who does sales for us, she was at Deutsche Bank, Daiwa, and Macquarie for 15 years. She was a managing director here. In DC, my partner, he was head of compliance and a managing director at Harris Williams, a US mid-market investment bank. And in Hong Kong, my colleague, he was at Deutsche Bank in corporate finance in Hong Kong. So we brought trusted relationships to open up Pakistani stock market to international market. So that was the introduction. Hammad, we can do this as a Q&A, and you can kick off. And I think some people have already posted questions. Happy to tell you more about both Pakistani stock market in terms of the composition of it, also in terms of how it compares with other regional markets, and see how why is it important for people living outside Pakistan to invest in Pakistan in terms of the return profiles which are generated.
I think people generally are interested mostly in some of the questions coming up, and I can tell you the questions you can answer. But what maybe a few minutes if you could spend on generally the microstructure of the Pakistani market, how deep it is, B, how broad it is, and a lot of perception that exists, which may or may not be true, but you are the expert in that area, to go through, is it controlled by a few individuals and corporations, or for a retail person, is it going to be investing? Let's start with those kind of things.
No, absolutely, that's great questions. So the Pakistan market is actually very broad. There are 600 companies which are listed in Pakistan. If you compare that with most emerging markets, especially the Middle Eastern peers or the frontier market peers, that's 600 is a big number. And also what's more important is that it's diversified across sectors. So around 25% is banking sector, another 25% is oil and gas and energy, another 25% is cements, automotives. So all the big brands which we hear about in Pakistan, ranging from Nestle to Unilever's to packages to Colgate Palmolive to Hum TV, to all the banks, they're all listed. Now, the reason why that's important is that most frontier markets, most emerging markets, do not provide that kind of diverse exposure to different sectors. So it's a very diverse market in terms of coverage of listed companies. On the side of the investor base, and coming to your question in terms of whether the market is dominated by a few individuals. So that was exactly my perception. In fact, when I was at LUMS, Asim Khwaja and Atif Mia published a paper about it, which said that there is some kind of market manipulation because the insiders have an edge over the market. And they used high frequency data to show evidence of that. Of course, since then we know that there is some advantage for high frequency traders and large traders in any market. Even in the US, you have investors who are always trying to find that edge, either by using faster connectivity or other means. In Pakistan, 25% of daily traded volume is not by individuals and it's not by Pakistanis. 25% of daily traded volume is by global investors. And this comes at a surprise to most people. In fact, once I was called by the British ambassador in Pakistan, and he said that, I want more British investors to come to Pakistan, and they hardly come to Pakistan. And I said, that's not true. Did you know that every day, most of your large asset managers, such as Standard Life, BlackRock, they're investing in Pakistan. And he wasn't aware about that. So as I said, 25% of the volume every day is by these investors. Daily volume right now in Pakistan is $50 million. So $50 million worth of stocks get traded every day. Now, again, if you compare that with the US, it's very low. Perhaps even Apple trades at much, multiple of that. But if you compare that with most emerging markets, it's a reasonable number. And what is more interesting is till 2008, our volumes used to be $500 million. So from 1992 till 2008, Pakistani stock market volumes are $500 million per day, which was similar to US volumes, and more than Vietnam and Malaysia, Indonesia combined. So now it's $50 million, 25% is global investors, 25% is domestic institutional investors. So people like banks, asset managers. There are around 25 asset management firms in Pakistan which have around 50 funds. The insurance companies, corporate investors, retail individuals, which include brokers, account only for 25 to 30% of daily traded volume. So the notion that these guys control the market is actually not true, and there's data which is published every day. Just because they are not big enough, you have to think, some of these myths are created. If I'm a big investor, let's say if I'm the Warren Buffett of Pakistan, I would want people to believe that I control the market because I would want people to follow me. And then it becomes a self-fulfilling prophecy, because if everybody follows me because they believe that somehow I can influence share prices, then that will help me. So some of this myth is self-created by people. Unfortunately, what it does is that actually impedes people from entering the stock market, because they think, oh, we will lose the money because the odds are not fair. The interest, as I said, if you take a step back, over the last 20 years, Pakistani stock market has on average given a return of around 17 to 18%, which is superior to the returns you would get if you put your savings in a bank account, in gold, even in real estate. So if you take data from Zameen.com and you compare that with the returns generated from the stock market is has generated superior return. Even in dollar terms, and there's I can share with you some data published by Bloomberg, that within the last 20 years, Pakistan has been a top 10 market globally 4 times. So the returns have been superior, and it's a very well-diversified market, and you can invest in a range of companies and brands which you as an individual recognize, ranging from Nestle to Toyota, which is Indus Motors, to Habib Bank, to oil companies and to power companies.
Ali, a few questions. Thanks for this this overview. I think a lot of people will find it very useful because the breadth, depth, and control by a few individuals, they seem to be the top things at many investors' minds. Some questions coming in. I think it's easier, but maybe I can just. So one question seems to be asking that: do we need brokerage firms in the future with blockchain and fintech?
Oh, that's a very deep question. I've done a lot of work on blockchain on this topic, and I think it will require a lot of time just to discuss that. The easy answer is, the trivial answer is that in the case of Pakistan, it's necessary for anybody who wants to invest in companies listed in Pakistan to go through the exchange, and for going on the exchange, you have to invest through a broker. Now coming to the blockchain world, and the short answer on that is that even in the blockchain world, there are companies which are brokers. All the companies which, the wallets which you're using, they're actually brokerage companies. But yes, in the blockchain world, it can be a merger between the exchange and the broker. But what we have seen in that crypto world is that it has also become very fragmented with a lot of middlemen in the value chain. But I think that might be such a big topic to discuss.
Yeah, I think that may require a little bit. If we talk about crypto blockchains and the effects on businesses such as these, what's going to happen? How do you see the current situation, especially in COVID-19, the economic slump in oil prices and global recession impacting the stock market, particularly in Pakistan?
Great question, Hammad. Coming to it, before I answer that explicitly, let me just give you one more point. As in, we as Pakistanis, we kind of know this background that doing business in Pakistan is tough, right? Like, we know that the barriers to entry are high. We know that regulatory costs are high. And we also know that there's rent seeking by the large companies. We always hear about it in media. For example, power sector. Right now, that's the hot topic. There's media full with news about that the power sector companies in Pakistan have been given dollarized return of 15 to up to 30%. The interesting thing is that as a stock market by investing in the stock market, a retail investor, a common person, can actually get the same returns which a Mia Mansha is getting, which a Razak Dawood is getting, which a Hussain Dawood is getting. And you can actually ride on their tail. So as a common Pakistani, while I cannot set up a power sector company because I might not have that kind of political relationships, but I can invest in Hupco and I can invest in the stock of Capco, and I can get a guaranteed dividend return, which these guys are getting. So that's the important thing to understand, is that the reason why Pakistan stock market is such a great market is because the companies which are listed on it generate supernormal returns. And the reason why those companies generate supernormal returns is because Pakistan is not a competitive market for business. People who are there generate supernormal profit, and stocks is a way of riding on their tailcoats. So to give you an example, Pakistani stock market dividend yield is 6%. That's almost like unheard of in our world. If you look at, as in most companies don't even give a dividend here because there's a focus on growth. In Pakistan, it's a regulatory requirement for companies who are listed to give a dividend. So although that discourages growth versus reinvestment, for a retail investor, it's great because you are getting a dividend return and you are benefiting from the entrepreneurial activity or the rent seeking which is being done by larger groups. So now coming specifically to your question, things are grim. COVID has hit the economy hard. Pakistan government has revised down its GDP growth forecast for this year from
2.6% to a negative 1.5%. And it's not, of course, the economic hit is not because of COVID per se, but it's because of the lockdown. So Pakistan went into a lockdown on the 21st of March. And now, because of the economic cost, they are opening up. So I think when it opens up, then the economy will start to pick up as well. The government has announced a massive fiscal and as well as a monetary stimulus, similar to what other markets have done. So they have announced a stimulus of 2% of GDP, which is a fiscal stimulus. But more importantly, they have cut interest rates. They have cut interest rates by 440 basis points from a peak of 13% to now, I think they are at 9%. The reason why that's very important is because from a stock market perspective, is that typically the stock market rallies whenever interest rates start to go down. And this is what we have seen in the market, that the Pakistan Stock Exchange, and there's an index called KSE 100, which is the index of the top 100 companies. That index is up 17% in the month of April, which has been the highest increase since April 2009. So for the stock market, like what's happening in the US, for the stock market, the stimulus has been kind of good news. But for the economy as a whole, of course, the lockdown has hit us hard. But I suppose not as hard as how the things are in the UK, where we live, and the US, where of course there are much higher casualties and the lockdown is much more strictly enforced.
Ali, there are quite a few questions, so I think we need to maybe move quickly on certain things. Sorry to cut you there. One question, I may also mention the name of people who are asking questions just to keep it interactive, from Imran Tariq. Why is the market not doing well over the last 2 years, and what do you think is the future?
Business cycle, so economic cycle. If you look at, so you have the stock market generally in every country follows what's happening in the economy. And what happens in the economy is the aggregation of what's happening with the companies. So over the last 2 years, what Pakistan had a balance of payment crisis. It started with, because you might know the story. Under the previous government, we had kept exchange rate stable at $100. It was a peg. It was an unnatural peg. What happened because of it was that imports ballooned, exports were stagnant. Trade deficit became we got a current account deficit of $20 billion, and we didn't have enough reserves to support that, which meant that every month our state bank was losing $2 billion of outflows every month. And a time came where we didn't have enough dollar to pay our international commitments, whether those are for importing or whether it's for other stuff like interest payment, etc. And that's why 2 years ago, Pakistan had to start talking to IMF for a bailout package. What typically that means is that in order to stem that, you had to make an exchange rate adjustment, but more importantly, you had to tighten the economy. You had to force the economy to slow down deliberately in order to reduce imports. So the government of Pakistan raised interest rates by almost 700 basis points. And when interest rates go up, economic activity shrinks. When economic activity shrinks, corporate profits decline. When corporate profits decline, stock prices also go down, because stock prices are a multiple of what the corporate earnings are. So to answer the question, over the last 2 years, we had a balance of payment crisis, which forced the government to raise interest rates. Now, because of COVID, ironically, because of COVID, all of those balance of payment issues are getting resolved automatically. Our imports are going down because you cannot import. Oil prices have gone down. So the oil bill, which was half of the overall import bill, has gone down. Inflation has gone down. And interest rates have started to go down. And that's why the stock markets have started to go up, precisely because of that inverse relationship between interest rates and equity prices.
Thanks, Ali. So another question from Ali K, your namesake. I hope you haven't asked this question yourself. What's the view of information asymmetry for retail investors, given the lack of corporate compliance and to exchange regulations? That's a general question across the markets anyway, but in relation specific to Pakistan.
Yes. So there are two myths or biases which are hidden in that question, and those biases, and I'm assuming those are biases because I also have those, or I also had those biases. And I must disclose that I'm working for Asian Development Bank for capital market reforms in Pakistan. So some of these questions in terms of issues in Pakistan, I'm actually also writing the policy for solving those. So it's not just a commercial motive. There's a reform motive as well. Pakistan market does not actually it has very good transparency and disclosure. We have published all the companies are required to publish quarterly statements, which is not the case in the UK. In the UK, we only publish results 2 times. So when I was a CFO of a UK listed company, I can tell you that disclosures in the UK are much lower than the disclosure requirement in Pakistan. So firstly, you have to publish audited accounts, and these have to be audited by the big companies. All the big 4 operate in Pakistan. They're published 4 times a year. Besides that, there is a lot of other information. For example, if you look at automotive sector, there's monthly data which is published on auto sales. If you look at cement, again, monthly data which is published both on cement sales as well as pricing. Fertilizers, again, monthly data. So oil and gas, monthly data published. So almost there's a lot of data which is available. Now, whether that data is accessed by a retail investor or not, i.e. whether a retail investor knows about that data, that's another question. And those kind of information disparities exist even in the US, or it exists in any market, because that's just a function of people's own knowledge base or ability to comprehend that information. In the US also, when people invest in Apple, it's not that they're reading the 4Ks or the 12Ks and getting or tracking Apple sales. Mostly a lot of retail investors, it's just momentum trading, which is why you see herd behavior in stocks, because when it goes up, everybody goes in. When it goes down, everybody goes out. I would even say that perhaps that behavior is lesser in Pakistan because our retail penetration is much smaller compared to a more active markets. So again, I know the tech market in the UK, in Europe, in tech world, it's very common for a stock to be up 7%, 8% in a day, and similarly down 7 or 8% in a day. That's not common in Pakistan. It cannot even happen in Pakistan because the regulator doesn't allow that. So, to answer your question, summarize this. There is information asymmetry, but Pakistan has a lot of data available. A lot of this data is available for free on the website of Pakistan Stock Exchange. They have a data portal. For example, we publish research and we distribute it out for free. There's also we have a website called ksb.blog, which has, it's updated almost, it's updated daily. It has all kinds of economic news and corporate announcement and all that stuff, which people can see, and it's for free, and it's all public information.
Thanks, Ali. I'll have to merge a few questions in the interest of time. So one is specifically around cryptos by Hira Salim. The question is, what is the reason behind making cryptocurrency illegal in Pakistan by the government? And do we see crypto in Pakistan in near future? Or partly?
What's the reason? The government of Pakistan, Pakistani regulator is the biggest problem in Pakistan. And this is this is not an opinion just from State Bank, it's an opinion on every regulator. And, again, my father was in the government in Islamabad, and my brother works at Pembra, which is the media regulator. So I'm saying that as an insider, that the regulator is the problem. So in the case of crypto, whatever they don't understand, they stop. And then they take a long time to understand. And by the time they understand, they retire and somebody else comes in their position. So he has to then understand that as well. I'll give you a small example. I was talking to my colleagues at Asian Development Bank, and she was complaining that she was dealing with a counterpart at Ministry of Finance. It took her like a long time to build the rapport and reach the same kind of understanding. And then that guy was replaced by somebody from Ministry of Health. So they had to start all over again. So that's the reason that they think that cryptocurrency might facilitate money laundering and criminal activities, and they need to understand it and they need to control it. And hence it stopped over there. And they are trying to learn. So the State Bank, I can see that they are doing a lot of events on crypto and digital and fintech in order to go up the learning curve.
There are quite a few questions, specifically, I think, on a technical note on maybe a more administrative note, I'm merging these questions on A, how to invest from a newbie perspective very quickly, how to invest in Pakistani stocks, how to invest in Pakistani stocks through KASB, and from a day-to-day perspective, what are the things to monitor?
So there are two ways of investment. One is that you don't invest directly. You invest either in an ETF, which tracks the whole market, and there's one ETF which is listed in Pakistan, or you invest in a fund. You give money to somebody else who's managing it, and there are 20 asset management companies in Pakistan. KSB is not one of them, so we don't do that, but there are 20 who are our clients. Or you can invest directly. To invest directly, I told you we have an app called ktrade.pk. You should be able to find it on iOS and Android. You can download it, open your account, and it can allow you can track stock prices on it. You can do virtual trading, i.e. demo trading on it. And you can also get access to the research, which is published daily. There's a lot of material on our website, ksb.com, ksb.blog, and on our LinkedIn and Facebook pages. Also, as I mentioned earlier, Pakistan Stock Exchange has a dedicated website called DPS. If you Google DPS at Pakistan Stock Exchange, you'll be able to access it. It's a very rich website. It has all financial statements, all daily data on stock prices. I think it's the best resource which is out there. And again, not many stock exchanges in the world have such databases. So I think from a corporate governance and transparency perspective, I would rank Pakistan very highly. Pakistan is much better than the likes of Germany and UK. You won't find this kind of information on companies and that amount of transparency and regulatory coverage which exists in Pakistan in these markets.
Thank you, Ali. I think maybe towards the end, I wanted to go through this, but maybe we'll just put that right here because we are on the topic. So I think part of the thing, obviously, Ali runs that firm. If anybody is interested in, please follow up with Ali's team at KASB on how to actually directly invest in stocks. That's what these guys do. And as he said, if you want to invest in the market, there are other means of doing that as well. And you can reach out to Ali directly to go through the investing process and so on and so forth. A few questions with some names here. If a company has taken a dive on its market share due to COVID or other reasons, reducing the market cap for the entire company, given the company has a free float of more than 50%, how can one capitalize on the same? Can a large investor take over the management?
Yes, theoretically, yes, because that's a question, and the question doesn't specify Pakistan or a sector. That's why theoretically the answer is yes. If you can acquire more than 50% share of a company, then you, in the next board meeting, you can use your rights, i.e. voting rights, to put your board members in the company. And once you have your own board members in the company, then you can, that means you have taken over the company. The reason, there are certain sectors in which you need approval. So for example, in the banking sector, if you have more than 5% shares, you need approval from State Bank. In media, if you have more than 20% shares, you need approval from State Bank. So in certain sectors, it varies. And in the case of Pakistan, takeovers are not that easy, but theoretically, it's possible, yes. Now, Hammad just wanted to touch on one point, which was a theme in the earlier questions. For me, starting this business, and I'm based in London, my family lives here. To starting this business was more of a mission-driven objective, that I wanted to open up access to Pakistani retail savers to the stock market. And the reason I thought that was very important is because right now most people just save in real estate, which is illiquid and a dead asset, or put their money in bank accounts or national savings, which gives very low returns compared to what it should. So it was a mission to bring the capital markets to these people. And this was only possible with two things. One is by access, by reaching out to these people, and B, by information, by telling them about how the stock market works, which are good companies, which are bad companies. So a lot of our focus in my work has been on investor education. We published a whole video series on how to invest. What does fundamental analysis mean? And right now, and Hammad, of course, is a part of that, we are making an online course based on CFA Institute's curriculum on investor education and finance, which will be open to everybody. So we are doing a lot of that work in terms of trying to educate people, but also use technology, and hence this app K-Trade, to reach out to people and enabling them to invest in Pakistan.
Thank you, Ali. Another question, I think you've alluded to that, but maybe a little bit more on. So taking your point, this question from Junaid Lashari, taking your point that 17% increase happened in April, we see that even in March, when the KSE was taking a nosedive, there were spikes of 700 to 800 points, despite no good news or any positive fundamentals. This happens quite frequently. Does that not point towards some external element? I think you touched upon interest rate. Maybe elaborate a little bit more on that.
No. So the easy answer, I'll give you an example. I wasn't working at Berenberg. I was covering this company called Mule Baba. Mule Baba makes machines for making smart cards. Your credit cards are probably printed by a machine, a Mule Baba machine. So one day the stock moved up 8%. Investors called me that what's going on. There was no news. There was no news at all. So I called the company. The IR was a German lady. She didn't know, her English was not that fluent. So she said, I said, what has happened? She said, Mr. Khwaja, stocks go up, stocks go down. No need to worry. So the point is that, yes, I think as generally as Pakistanis, we have this natural tendency to attribute everything to some kind of, scam. We are risk averse, and, the fundamental notion of trust doesn't exist that strongly between us. There's a book by Malcolm Gladwell called Talking to Strangers, which is all about that in the developed countries, we tend to default to truth. If Hammad says, if Hammad says something to me, I kind of will believe him. Similarly, when a doctor gives us some medicine, we kind of believe him. While in the case of Pakistan, I think that is quite weak. And that's the notion which I'm trying to dispel with this talk, that at least I can tell you from my experience, and I can give you, exact examples as well. Pakistani market is actually quite superior and well regulated than compared to other markets. So to answer your question in terms of, why does those spikes happen? Stocks move on demand and supply. If you have more buyers and less sellers, then the stock goes up. And it's a function of that. Now, in any given day, because the stocks are illiquid, there's not too much of trading happening in any given day. Those kind of movements can happen very easily. If, for example, if today BlackRock says that I want to buy stocks in Indus Motors, which owns Toyota, just by that order, Indus Motors stock price can go up by 15% over 2 days. The 2 days they are buying stock, because there's more demand and less supply. So intraday volatility in illiquid stocks is very common. And it's a very normal behavior in any market, whether it's Germany or UK or US. Which is why it's, from an investing perspective, you almost have to ignore these things. That's the whole skill, that you need to have the emotional patience to take a step back and take a longer term view on investing. The 20% return, which I mentioned earlier, those 20% returns are not generated by intraday trading. You only lose money by trading in short terms, unless you are a very sophisticated hedge fund, like the kinds of what Hammad manages, or the funds such as Millennium and these guys manage. For a normal person, intraday trading, whether it's in the UK or in the US or in Pakistan, will only lead to losses, because you will invest when it goes up by 8%, then it will come down because it's normalized, and you will then sell because you think something abnormal which has happened. So the point I'm trying to make is that when you're looking at companies to invest in, you should look at their profits, you should look at their dividends, and the stock, you should have a faith and a belief that the stocks will follow that. And the reason why you should have that faith and belief is because if you look over long term, stocks do follow the profits and dividend yields of companies.
Thank you, Ali. There are quite a few questions actually, so I might have to select now, because given that we have a hard stop in about 13 minutes. So there was one here looking at the rupee devaluation, and you mentioned in dollar terms. What's your view on the rupee devaluation versus the stocks that somebody invests in dollar and dollar return actually not being as great as people want?
You should assume that the rupee will depreciate by around 5 to 7% per annum, because that's what the interest rate and inflation differentials between Pakistan and the US dictate. So that's the kind of theoretical return, theoretical depreciation or the loss of rupee which should happen in a year. Now, in the case of Pakistan, sometimes it doesn't happen because the exchange rate is managed. The state bank manages the exchange rate. They don't want volatility in that exchange rate. So what tends to happen is that whenever we are giving dollar payments for our interest international debt, the exchange rate suddenly depreciates. And whenever we get inflows, then it appreciates slightly. So for example, if you noticed over the last 2 months, the exchange rate dollar went to 166, and then it came back to 159. The reason it went to 166 is because we had an interest payment which was due at that time. And post that, IMF started giving Pakistan money and ADB and World Bank started giving money. So it appreciated. But you should assume that there should be at least 5 to 7% depreciation per annum. So if you apply that on current exchange rate, it gets to around 170-ish by December and 175, 177 by June 2021.
Isn't another question by Rana Romail, isn't it better to invest in the UK or US market versus Pakistan, which have more probability to rise after COVID-19 leaves?
So over the long term, Pakistan, again, depending on which horizon you pick, Pakistani market on average has generated better return than UK. US over the last 10 years has been a different animal altogether. It has been the best performing market in the world. So, so that's true, that the US has generated higher return over the last 20 years. Typically, the case for emerging markets exists because these markets typically are higher growth markets. So Pakistani corporate earnings are higher. Pakistani growth rates should be higher than the US and UK, and hence the return theoretically should be higher. Now, that hasn't happened in the last since 2008 because the US has been an anomaly. But comparing with the UK, I think Pakistan would have generated higher returns. I told you earlier, Pakistan has a dividend yield of 6%. So even if the stock market doesn't go up, you get a 6% return in Pakistan, which you don't get in the US. But one can argue that 6%.
I think we might have lost Ali again. Are you there? There are quite a few questions left still. Coming back.
Hammad, I do see him. I think he might just reconnect.
Okay, let's give him a minute.
Yeah.
By the way, just a few housekeeping things I think the admins have just mentioned. So there's a hard close in 8 minutes because there is another event right after this at 7 p.m. London time.
Yeah, Ali has rejoined. I'm just going to
Okay.
Unmute him and
Yes.
Ali, you're good to go.
Not only is it a bad hair day for me, it's also a bad IT tech day for me. Hammad, can you?
So, okay, I'll start with another question, I think, which we haven't covered. Do KSB maintain, I think this could be interesting for quite a few people on the list. Do KSB maintain or recommend a list of Sharia compliant companies in Pakistan?
Pakistan Stock Exchange does that. So Pakistan Stock Exchange has a separate index. It's called the Sharia Compliant Index, which has companies which are Sharia compliant. So yes, they maintain a list of companies. KSB doesn't need to because they publish it for everybody.
Another simple housekeeping item for you, Ali, maybe for the benefit of everybody, is from where can we get the content which you mentioned, the educational content, the videos, and all the stuff that you mentioned?
So a lot of that stuff is on our website. It's called ksb.blog. So and which has a lot of the videos A lot of it, we publish it on LinkedIn and Facebook as well. So there are pages for KSB and on both of those platforms. And I highly recommend you to also follow the Pakistan Stock Exchange website, DPS, which has a lot of data. For those of you who like data analytics, trying to do technical analysis, etc., you will love that website, dps.psx.
A question from Tausif Akhtar. What is the average growth rate of equity companies? What about return on equities? EPS, most importantly, the gap of market prices and intrinsic value of stocks. So this question is mostly around the expected rate of return.
So that's the most attractive thing about Pakistan, that our ROEs are one of the highest in the world. In fact, I must point this out that in 2005, Merril Lynch rated Pakistan as the top 3 market in Asia as their recommendation to investors. And even right now, Chris Wood, who's a legendary emerging market strategist, he works at a US firm called Jefferies. He rates Pakistan superior to, it's his biggest overweight position. He rates it better than India. So from an institutional investor perspective, Pakistan ranks very highly because of matrices such as ROE, earnings growth. So our earnings growth on average have been around 17 to 18%, and the ROEs of the companies also vary from around 15% to 25%, depending on which company and which sector are you looking at. So for example, if you pick up bank, Mizan Bank, which is an Islamic bank listed on PSX, that bank has maintained growth rates of more than 35% over the last 5 years in terms of earnings growth, which is EPS growth, and its ROEs have been close to 30%, which is rare. I was in a meeting with a large US asset manager, and I told him about the stock. He pulled it up on Bloomberg, and he was shocked. He said, it's such a great growth story, and the stock is so cheap compared to the banks listed in the US or UK. So that's the answer. That on average, our earnings growth has been 15 to 18%, and ROEs have been, rule of thumb, around 20%. But of course, the ROE vary from one sector to another.
This is more of a prediction question, so maybe say whatever you want to. In your opinion, which sectors would generate good ROI in the next 2 to 3 years?
Yes, so that's prediction is always difficult. It's easier in hindsight. I think right now cyclical sectors would do well. The reason is that cyclical sectors such as cement, everything related to construction activity, steel, and after that automotive. What has happened in these sectors is that because of the bear run over the last 2 years, when the government of Pakistan was raising interest rates, activities in this sector shrunk significantly. So people stopped, under Nawaz Sharif's government, we were making big roads and motorways, and all of that stopped for a period of 2 years. Now, post-COVID, the government is giving a lot of incentives to these sectors. They have announced a whole construction package, which includes things like tax benefits for encouraging development of more homes. So when that happens, cement companies should do better. Steel companies, there are a few such as International Steel, which are listed. There are 4 or 5 steel companies which are listed. There are around 15 cement companies which are listed. I think these should outperform the overall market. And after that, automotives, because companies such as Toyota, 50% of their market cap is in cash because of what has happened. So when the recovery happens, these companies should tend to do better, will do better in the market.
Okay, I think we are approaching the closing time. It's a shame we couldn't cover all of the questions. So maybe just 2 things to mention here. We will have a follow-up session with Ali because A, there is a lot of interest. B, I think we haven't really covered everything and all types of questions here. So maybe we narrow down the topic to a particular thing, looking at the questions, and then we'll go for another one. We have to stop here in the next 1 minute. So Ali, I'll just ask you for maybe a 30-second helicopter view to end this.
Yes, so I think the point I would love you to take away from this call is that Pakistan market is actually very transparent. Annual reports are published 4 times a year. They're all audited by the big 4. All the companies, operate over there. You can see all that data on PSX website. So you can track that data. Pakistani market generates very high ROE and has strong growth. And the reason for that is because our industry is protected because of high barriers to entry. You did a session on dairy farming, and somebody also said that larger companies tend to do better because there's barriers to entry and scale benefit. So in Pakistan, all the large companies generate supernormal profits, and the only way you can benefit from the profits which Amir Mancha or Hussain Dawood or Muhammad Ali Tabba generates or a Saigal generate is by investing in the stocks which are listed on the exchange. The market is not manipulated by a few companies, and you have data published every day by National Clearing House, which shows that the biggest investors from a daily perspective are institutional, not individuals. And all your large asset managers, from BlackRock to Pictet, invest in the market. So they don't believe in this bias that the market is manipulated or there's information asymmetry. So feel positive on Pakistani stock market, and it's not that difficult to invest in it. So I want to leave with a message of positivity, and that was my reason for investing in Pakistan. That I thought that our biases stop us from getting involved in activity in Pakistan. So I think this WhatsApp group is a wonderful initiative, which will help Pakistani diaspora, including like people like us, to reconnect with Pakistan. So thank you for your effort for this, Hammad.
Thanks very much, Ali, for your time, especially given that it's almost iftar time in the UK. You have to speak a lot. But thank you, everyone. We have to hard stop here, but we will rein in Ali again. He's also present in our WhatsApp group. So feel free to bug him. He's a very well-published and well-spoken person and very knowledgeable in the markets. Thank you very much.